Hello, friends. This is Gaurav Goel from Lamuksh Investments, and I've come here to discuss something very important today. It's all about we're facing a tricky issue in terms of Omicron, which is a variant of the deadly COVID that we faced last year and this year as well. It's uh, it's not so lethal as the specialists are saying, and possibly it may end sooner than we all think. But we really need to understand what it's all about for our portfolios, and what if it becomes more destructive, then how should we be positioned in terms of our portfolios, what we can do, and what can we further think about addressing at this point of time. So first of all, we need to just go back a little and try and understand what happened in the year 2020 when the COVID-19 actually attacked us in a massive way. So, and when it really started in India in January and slowly became massive in the month of March when the lockdown was imposed, we saw a tremendous destruction of wealth. And I distinctly remember since Nifty plummeting from almost the highs of mid 12,000s to mid 7,000s. Now, and this happened in a very short span of time. And a lot of investors, even before they could react to the situation or understand what was happening, they saw that their portfolios eroded in a very big way, and the magnitude of the destruction was huge. And when the bounce back happened, the other side of it, when the bounce back happened after March and the recovery started happening, and a lot of skeptics, people didn't know when the slide will stop, and there were all kind of predictions, dire predictions that were happening. There were very few people who were convinced that this rally is sustainable and it's going to last long, and so people did not really participate. There was no method. There was no the opportunity was not really seized. And not that I blame investors, but maybe it's something that there are lessons that we can learn out of it. It's only much later when the when the rally became very big and became a lot more sustainable, then and people realized that yes, uh, there's money to be made. It's much later in the rally that they actually started participating, and that's how the whole retail rush came in. Now, what we are witnessing once again, and it's December of 2021, and what we are seeing, we the advent of Omicron, which is a variant of COVID. And as I said earlier, it's supposedly not so lethal, but very infectious. That means it spreads very fast. And as of today, when I'm speaking on December 29th, I realized that we all realized that it's permeating the metro cities of India in a very significant way. And I dare say that in perhaps 1 month from now, it would be everywhere. It would be around us everywhere. And hopefully, fingers crossed, I hope and believe that this will not be as bad as what Delta was or the original COVID variant was. And hopefully, we should all sail through safely. Um, Now, coming back to the investment part of it, I don't want to digress into the health issues because I'm not really an expert on that. But I just want to sound caution to all the investors that what if this becomes really big, and it becomes as bad as what we witnessed in the middle of 2021 when the second wave hit us in such a big way, and all of us suffered, and all of us, saw what happened. And now the only silver lining in mid-May was the fact that a lot of Western countries, particularly US, was not suffering the way we were suffering. But this time around, US, the European countries, uh, globally, we are seeing huge number of Omicron cases across the globe, plus the COVID cases, and now we are seeing cases rising in India. So, what should we do at this point of time, having learned our lessons from 2020 and 21? And what should we do at the onset of Omicron? And hopefully, repeating once again that it's probably not as deadly as what it was. But if something goes wrong, should we do something at this point of time to ensure that our portfolios do better, or portfolios sail through or do something at this point of time? That's where you actually need to study your portfolios. What went wrong in 2020 and 2021 in terms of your portfolios? You need to see which sectors actually did well during that period. Are there particular sectors which at this point of time might do as well as those sectors if COVID or Omicron was not there, which might still do as well as the other sectors and still yet remain defensive or yet remain oblivious to the spread of Omicron? So that's a very crucial question. And to my mind, there are certainly some sectors which can do wonders. Omicron or no Omicron, they will do very well. So I think these are no-brainers. So let me point out one such sector, which is an IT sector for sure. So we have seen tremendous amount of resilience that IT sector showed. In some ways, there was a huge amount of excellence by the IT sector and superlative performance vis-a-vis the other sectors in 2020. And even today, it is not overvalued at this point of time. It is not something which is going to go bust if something goes wrong in terms of rising COVID cases. It's not something which is going to probably do lesser than its peer sectors if nothing goes wrong and markets do fantastically well. So, can we add more of that in our portfolio? Can we add some pharma in our or healthcare sector in our portfolio? And maybe, for some time come out of some of the other sectors which might, face the brunt of a crisis if it becomes enormous. So I think what is very critical is to understand your portfolios, understand that financial, what is the financial health of your portfolio? Do you have extra money to put in your portfolios? Can you have a method in the madness? If it becomes really, really mad, markets are always mad, but it becomes very, very bad or and extremely mad, then what will you do at that point of time? That's why you need to have a method in madness. Analyze your portfolio now, ensure that you take the right decisions now so that you don't suffer tomorrow. Reshuffle your portfolio if it is required at this point of time. Add certain sectors, exit other sectors, and seize the opportunity if it exists. Mind you, in adversity, there are always opportunities, and that's where you really need to, act upon. And if you can't do it, please do not hesitate to take advice of people who understand it better. There are certain SEBI registered investment advisors who understand markets much more better than what you do if you want to seek some experts, or there are enough people in and around you who probably understand markets much better and can help you with that. Just be mindful that you're seeking advice from the right set of people. So, so just be careful about what's happening. And another thing that you should also remember at this point of time is you should be nimble. So even if the it's a full blown crisis, let's assume in January and February it becomes really big, everyone is suffering. There are reports that hospitalization rate is much lesser, but let's assume it becomes really big. People are heading towards hospital from almost every second family, and markets are reacting negatively to it globally. It's all pessimism. People on the TV sets are coming every day and talking of nonsensical levels of markets, and experts are giving stupid advice of exiting your full portfolio. There's no point exiting at those levels. I think you should plan your plan your investments in when markets are falling, if you have extra money to deploy at that point of time. And that is the right way to behave. Put percentages in place. If market falls by 10%, I'm going to deploy 10% or 15% or 20%. Another 10%, I will deploy another 15 to 20%. That is a choice that you can make. 15%, 20%, 10% is all up to you. Or you can seek an advice in that respect if you can't make that kind of a decision. So these are the things which you really need to ask and be prepared. Otherwise, you'll only face the regrets. And that is my humble request to all my uh, friends, investor clients, all kind of people, retail investors who who have just joined the party, who have not seen the bad periods, the bad cycles, the lower phase of the cycle where markets actually are falling. They've just seen the, entered in the market in last 1 year and seen Nifty grow by 23%, mid cap by 45%, small cap by 57 odd percent in last 1 year, and they're very happy and they've not seen markets crashing. So you need to prepare a plan. You need to be ready. You need to be absolutely geared up to face that crisis and be ready and seize opportunities if they are available, and you have enough mind space and sufficient method in your way of investing that you can take take it head on. So so that's what my whole suggestion is. All the best, guys. Be ready, be prepared, and all the best.